Good morning, everyone. I'm Kathleen Warshawski, and welcome to Long-Term Care Insurance and VA Benefits 101, presented by Seniors Blue Book University. We've got a great program today for you. Excited that you all could join. A couple of housekeeping things. I want to make sure that everyone knows if you have questions that you would like to ask our speaker, please put them in the chat so that we can address those for you at the end of the program. Make sure that you put your speakers on mute during the program so that we don't hear any of that background noise, okay? And we'll get started here. So the purpose of today's educational activity is to increase the knowledge of the professional on long-term care insurance and VA benefits, on benefits that are available, qualifications, and how to access and apply for those benefits so that they can improve the quality of care and end-of-life experience for aging adults. The objectives: the participant will be able to demonstrate education, long-term care. I'm sorry, I'm just admitting a few latecomers, so I apologize. Demonstrate educational long-term care insurance policy structure to assist patients to understand what benefits they qualify for. Discuss what to instruct patients to do who have long-term care policies so that they may access those benefits, and describe the VA aid and attendance benefit qualifications and application process so as to educate veterans to better access their benefits. Requirements: you must complete all of the sign-in information, your name, email, date of birth, and credentials, attend the entire presentation, complete the evaluation tool. We'll send a link to you at the end for that, and it must be done by the end of the day tomorrow. A certificate of successful completion will be awarded. There'll be 1 contact hour for CCM board certified case managers, social workers, and nurses. The certificates will be sent via email sometime in the next 4 to 5 weeks. If you need a certificate for more than one of those, so if you need a nursing certificate and a CCM certificate, make sure that you check both of those boxes. You'll receive both. Conflicts of interest: there are no relevant professional, personal, or financial relationships associated with planning or implementation of this continuing education activity. There's no commercial support has been received. The activity is being hosted by Seniors Blue Book Greater Dallas and SVB University. There's been no commercial or financial support for the program. The continuing education credits are being provided by two providers. One is Seniors Blue Book for social work and nursing, and the other one is by Amada Senior Care Incorporated, and that's for your certified case managers. None of today's program hosts or sponsoring companies had any input into the content of today's program. And now I'd like to introduce our speaker to you. So Eric Van Gotham, he brings 15 years of healthcare experience, ranging from the operating room to healthcare administration and post-acute in-home care. During his time as a senior care advocate and the owner of Amada Senior Care, Eric has helped hundreds of families navigate the long-term care insurance claims and VA aid and attendance qualification processes. Eric is recognized as a premier long-term care insurance claims expert in the DFW area by none other than his mom. Please welcome Eric Van Gotham with Amada Senior Care. All right.
Hey, thanks, Kathleen.
And I think I have to stop my share in order for you to be able to do so.
Yeah, and we are going to give it the old college try on PowerPoint.
Yeah.
Share.
While you're doing that, there were a couple of people in the waiting room who are just joining us, and I just want to make sure that they know that we just reviewed all of the disclosures and we're getting ready to start the event. All right, you can take it away.
All right. Kathleen, do I need to swap the displays again? Are you in my presenter view?
Nope, I can see exactly what I'm supposed to see.
Okay. I was on the wrong slide, but we'll go ahead and get started. Hey, thank you so much for having me, Kathleen. I really appreciate the opportunity to get in front of folks today. I apologize in advance if I'm a little Zoom rusty. I'm used to doing this in person. So please do add those questions and comments to the chat box. That's my favorite part about doing these CEUs. I did one in person on Monday for some folks, and the dialogue as we go through is the part that I'm definitely going to miss today. That said, we will dive right into it. We're going to be talking about long-term care insurance and VA aid and attendance today. Thank you guys for submitting the questions ahead of time. Most of the questions, as I read through them this morning, we are going to cover directly in the presentation. One caveat I want to give right off the bat is that this presentation focuses on the VA aid and attendance benefit. There is another VA benefit that applies to caregiver services called the homemaker or HHA or respite care benefit available through VA healthcare. I can talk on that a little bit, but the CEU is going to be specifically on the aid and attendance, but I will touch on the homemaker benefit as well through the community care and health and veterans healthcare department. So I know that when we're discharging folks that need caregivers as case managers and social workers and discharge planners, we're often coming across folks that really need care, and we're trying to figure out how to help them afford it. It's not a cheap endeavor, and it's not covered by really anything of substance when it comes to Medicare or private health insurance. There are a couple caveats there, but again, not our focus today. So we're looking for other payer sources, and two of the biggest ones, especially in Texas, I think most of y'all are from Texas. Two of the biggest ones are long-term care insurance and VA benefits. About the stats I've heard nationally are anywhere between about 6 and 12% of the population has a long-term care insurance policy. In Texas, our average is closer to 20%. So we're doing really well. So we need to be making sure as discharge planners that we're asking every single patient that comes through if they have a long-term care insurance policy. And additionally, another 30 to 40% of our patient population are veterans. So between long-term care insurance and VA benefits, in theory, 1 out of every 2 discharges should have some applicability towards their discharge plan if they need caregiver services. Key learning objectives today. 1, we want to understand long-term care insurance history. As with anything, we need to know where we've been before we can figure out where we're going. We're going to master, you guys are all going to be masters after 55 minutes here of the long-term care insurance policy structure and to be able to help patients recognize which benefits that they might qualify for. Know how to instruct your patients who have long-term care insurance. This is the key, because I find that, I've found plenty of case managers who have had honest conversations with me. They've just said, Eric, like, when I ask somebody if they've got long-term care insurance, if the answer is yes, they turn to me and say, here it is, what do I do with it? And I've just made myself all this work and I don't know what to do with it. So we're really trying to help improve your competence when you're talking to folks that have long-term care insurance. So, and then 4th is to understand the VA aid and attendance qualification, application process, and how to better educate our veterans on their benefits. So diving right into the long-term care insurance history, this is a product that came out in the 1960s. So long-term care insurance providers have been selling policies since the 1960s, and they basically started with the same actuarial science as they did for life insurance. So they underestimated how long people would live, and they also underestimated the lapse rate. They expected more than 30% of their policies to lapse, that people would just stop paying for their coverage. And in actuality, it's been less than 1%. So between those two things, and then the length of claims increasing, in part that's due to memory disorders such as Alzheimer's disease, who are folks that may be physically healthy, but their policy covers supervision for a cognitive impairment. And so they are living a very long time and needing extensive care. So that's very expensive for these policyholders. So what does that turn into? It means that the insurance companies are trying to get essentially back to that 30% attrition rate And the only way to do that is to get people to surrender or give up their policies is to increase their premiums. So in Texas, they've got to go through the Texas Board of Insurance and get approved on every rate increase, in any given year. They can only do it so often. With that said, there are companies out there that will do it every chance that they get. And I can talk about who the worst offenders are. Genworth in particular is one of the worst offenders when it comes to increasing premiums. But then what can we do as case managers to protect patients and reduce readmissions? We need to understand how long-term care insurance works. B, we need to be asking our patients if they have it. And C, if you need a resource that you want to physically hand to people, we have a long-term care insurance planning guide that literally walks them step by step through what we're going to go through in the first half of our presentation today. So a little more on the history of policies is that most folks that have long-term care insurance have been paying on it for years and years and years. They've been paying that premium monthly or annually for many years. And at the end of the day, most patients, they wait far too long to activate them. And this is a psychological thing most of the time. They want to quote unquote save it for when I need it. And they don't want to admit that they need care. Well, the problem with doing that is that if you don't get care when you need care, then you tend to decline faster. And you go from maybe you could have gotten away with somebody stopping by a few days a week just to take some of the burden off of you, and you could have potentially qualified for your policy, and then that's going to help prolong how long you can use that policy. So we don't just look to turn we're as case managers, we shouldn't be just looking to have people maximize their benefits. We should be looking to have people strategically use these policies for their health and to keep them out of the hospital, because that's not what they want. Again, they don't want to admit when they need help. And if they're in the hospital, often they meet the criteria for policy activation. And the biggest kicker is that once somebody goes on claim, usually they don't have to pay those premiums anymore. And we're going to discuss a lot more about waiver of premium later. But so the best way to help patients preserve their policies is to activate them when needed and understand how they can slow drip their benefits rather than trying to use them all at once, depending on the way the policy is structured. The 2 points here are very, very salient. So most people that have a policy, they don't understand what the covered benefits are or how to file a claim, and they don't know where to turn. Oftentimes they'll turn back to the person that sold them the policy, and that person, they may be excellent about planning long-term care insurance policies in theory, but when it comes to actually filing a claim, they don't understand. Even the agent that sold it doesn't even understand that part. And then here's the other big part is when people try to do this on their own, they inadvertently disqualify themselves for coverage on the initial call because they didn't understand their policy before calling to make that inquiry. And so what happens when people call in to ask about their benefits in their long-term care insurance policy, if they're doing it on their own, the long-term care insurance agents on the line are trained to say, okay, that's great. You need to open a claim today. We're going to get you over to our claims department, and we're going to ask you about all the help that you need. And as we're going to talk about, if they don't need the help that is covered by the policy, then they're going to get themselves disqualified on that initial phone call, which means that if they're going to get a claim approved, they're going to need to go through an appeals process, which is going to be very lengthy and very difficult and require an immense amount of documentation. So when we get into the structure of long-term care insurance policies, there are 6 core components to almost every long-term care insurance policy that I've seen. The first one is the elimination period. When you see an elimination period, just think deductible. The next is the maximum daily benefit, and that's the maximum amount the policy will pay out per day for covered services. And then there's a maximum lifetime amount. That's the maximum amount that the policy will pay out over the life of the policy. Next are the covered benefits. So what benefits are covered can vary significantly from one policy to another. We're going to talk about caregiver services, or some will call it home health care. We will talk about facility-based care. There are even some goods or products that are covered by these policies. There are a lot of variables. So the variables, this is going to be things like a waiver of premium that we touched on, restoration of benefit clause, an inflation rider. All of these things are variables that can drastically change the value of a policy to the policyholder. And then lastly is the claims process. So what documentation is required, what number of ADLs are required to qualify for care, and what does the provider need to look like? Can this be a family member? Can we hire a person without an agency? Do they have to be a CNA? Do we have to go through a licensed agency, et cetera? So these are all questions that we need to answer. Starting with the first one, the elimination period. This is the deductible. So if you've got a car insurance deductible, $500 or $1,000, essentially you pay that $500 or $100 or $1,000 out of pocket first, and then your car insurance kicks in and picks up the rest. The elimination period works much the same way. This is going to be the period in which the policyholder is responsible for paying out-of-pocket costs before the policy starts kicking in and paying benefits. Deductibles range. Every single policy is going to be different. I've seen 0 day, I've seen 15, I've seen 30, 60, 90. I just saw a 100, I saw a 20, and then I've seen 180. So they run the gamut. So the deductible period is kind of that barrier to entry to getting people to actually use their policy. Next, we need to understand, are those days, are they calendar days or are they actual service days? So oftentimes when people start receiving care, they don't need care 7 days per week. They will have family members that can assist on the weekend, or maybe they only need 3 days of service per week because their primary ADL needs are bathing and dressing, and they don't need to take a bath or a shower 7 days a week. So we need to know how that works. So if they get 3 days of care per week, does that equal 7 days on the elimination period? Or does that only count as 3 days towards their elimination period? Because obviously on a 3 day a week care plan, that's going to make a big difference in the actual time that it takes them to get their claim approved. Then next, do previous stays count? Do previous stays at skilled nursing, home health, home care, or assisted living, do those count towards the elimination period? And how do we figure that out? And then one and done. Is this policy elimination period, does it apply to every single claim? Or is it just one and done? Once you've satisfied it once, then you never have to satisfy it for the rest of your life. I've seen both. I would say the vast majority are one and done, probably along the order of about 90% are one and done. But there are policies out there that you have to meet the elimination period for every single claim. Some policies will even have different elimination periods for different care settings. So home health care has a different elimination period. And I hate that we use those terms interchangeably, home care and home health care, but that's what these policies do. So we need to really dig into what is covered by the policy. But sometimes they'll have a facility elimination period and a home and community-based care elimination period. Next is the maximum daily benefit. This is the maximum amount that the policy reimburses per day. Now, some policies will have a weekly maximum or a monthly maximum. We also, there's inflation riders are things, I think we'll talk about this a little more later, so I'm gonna skip that bullet point for now. If the policy is, it is weekly or monthly, this makes a big difference in how the policyholder can use the policy. So usually this is where I kind of do a pop quiz, and I look around the room and I ask for somebody to tell me what is better for the policyholder: $100 per day, $700 per week, or $3,000 per month, assuming that every month has 30 days in it. So the math all works out the same. And usually this is where people start to think, and I pause and I look around, and you can throw your answer in the chat if you want to. But the way that I look at it, and the way that we should look at it, is that the most flexible option is $3,000 per month. And the reason for that is, if somebody has that care plan where we talked about that was only 3 days per week or 5 days per week, well, if your maximum daily benefit is $100 per day, then you can't go over $100 on any given service day. However, if your care plan is 3 days a week and you have $3,000 per month, then you can spread that $3,000 and have more than $100 worth of care on any one day, because that policy is simply going to pay the first $3,000 billed in any given month. Next is the maximum lifetime benefit. This is the amount that the policy will pay out over the lifetime of the policy. we need to understand, is that measured in dollars or is it measured in days? So folks are typically, with traditional long-term care insurance, they're going to have a bucket of money or a bucket of days. And we need, if it's a bucket of money, then typically if you say you have a $200 a day maximum daily benefit, but you only used $100 of care that day, the other $100 typically stays in your bucket of the maximum lifetime benefit. Now, if you have a maximum number of days, and let's say you have 700 and 670 days, whatever it is, however many days, if you use a day, regardless of whether you use that full 200 or if you just use 100, what happens to that? Does that stay in the policy? Most likely not. If you have a maximum lifetime benefit that is totaled in days, you probably lose the rest of that daily benefit forever. That's kind of how much together, that's what that last bullet point means. Next, what are the covered benefits? What goods and services are covered by the policy? Up to this point, we've only talked about services, but there can be goods that are covered by the policies. These policies can have clauses to cover things like durable medical equipment and home modifications. So think ramps and grab bars, basically anything that is not going to directly increase the value of your home. So they're not going to be putting in a sauna or a hot tub for you, but if you need a ramp, to get a wheelchair accessible in and out of the property, they can have these home modification benefits. They also have monitoring services that can be covered through a lot of these policies. So we really need to see that last point to clarify to figure out what is covered by the policy. The one or more, most policies are going to cover one or more of the following: skilled nursing facility, assisted living, home care, aka home health. When they started writing, when most of the policies that I'm seeing these days were written, which is generally between 1999 and 2006, everything was listed as home health care. And when you read into the definition of home health care, they talk about PT and OT and skilled nursing visits, but they also talk about caregiver services. So they lump us in home care into the same category as home health. And you've got to be able to kind of speak that double lingo and still tell the family that, yes, your Medicare can cover some of your skilled home healthcare services, but your home care services need to be covered by your long-term care insurance. Then adult family homes or board and care homes, adult daycares can be covered. All of these are things that we need to uncover while reviewing the policy. Next, on the variable benefits. So what's hidden? A lot of these policies are going to have other benefits that unless you know how to read through the policy and find it, that they're not going to advertise to you when you file a claim that all of these things are available to you. So restoration of benefits. This is a clause or a rider on long-term care insurance policies that basically states that if you start care and you use a certain portion of your policy, but then you recover and you no longer need care services for a certain period of time. Generally, it's 180 or 6 months. I've never seen one as short as 90, but generally it's 6 months, but it's written as either 180 days or 6 months. They will actually restore your maximum lifetime benefit all the way back up to where it originally started. So if you had $200,000 of care and you used $100,000, but then you got better and you didn't need services for 6 months, well, your policy is going to restore back up to that initial $200,000 bucket if you have this clause. Next is waiver of premium. This is the clause that waives the client's premium after services started. Very important to read the details of this clause because some of them will say that the premium is waived as soon as you are receiving care. Some will say 90 days after you're receiving care. But at the end of the day, if you have a waiver of premium clause, then while you are receiving benefits under the policy, you are not paying for your premiums. And then the last thing, inflation rider. This is what maximizes the maximum daily and maximum lifetime benefits each year on the policy anniversary date. You could have a simple inflation rider or a compound inflation rider. Simple would just mean if you started with $100 a day back in 2000, then every year your policy would go up. If it's a 5% simple, it would go up by $5 every year. So 100, 105, 110, 115, it would be a linear increase. If you have compound interest, then that would mean that you start at 100, then the first year it goes to 105, and then the next year it goes to, it's a 5% increase on the 105, not on the 100. So you get exponentially more as the interest compounds on itself. And that makes a big difference over time. Next is our claims process. So this is super important. The policies are activated typically by the number of ADLs that the policyholder requires assistance with. Those ADLs will be defined in each policy. The 6 ADLs that are in almost every policy are going to be bathing, dressing, toileting, transferring, continence, and feeding. It'll say eating sometimes, and that's a very confusing ADL to people because they think, well, I can't make it to the grocery store or I can't cook my own food, so that means that I qualify for this ADL. In reality, the way that the nurses ask this question, they say verbatim, once a meal is prepared and set in front of you, are you able to feed yourself? And most people can still do that, even if they need assistance with bathing, dressing, transferring, ambulation, etc. So that's typically the last ADL that somebody will qualify for. Most policies are also going to have an alternative trigger for cognitive impairment. And then we need to read the definition of what is considered severe cognitive impairment, what is considered supervision for that cognitive impairment. Next is the assessment and verification. So an assessment is going to be required. They have to verify that you need the assistance that you're claiming that you need help with. So typically that will be done by a nurse, or they may need medical records from your doctor. Sometimes they need both. During COVID, a lot of folks started doing telephonic and virtual nursing assessments. So we need to clarify, is the nursing assessment going to be done in person, or is the nursing assessment going to be done over the phone? Because if it's done over the phone, everybody typically wants to be very optimistic about their own condition, and they will often say they need less help than they do. So we always push to have an in-person nursing assessment. I have nurses on staff that will go out and do our assessments in person. So in case we ever have a discrepancy between us and the carrier, that we have that documentation. And then here, the key to this slide is the last point, which is ADLs initiate the claim. So I can't tell you how many times I've had somebody come up for recertification and they will just gush about how great their caregiver is. And they will say, oh my gosh, I couldn't do it without Susie. She's amazing. She does the dishes for me every day. She cooks all my meals. She does my grocery shopping. She does all these amazing things. And the nurse on the other end of the phone says, that's awesome. Tell me about how she helps you get dressed. And the client they'll lie and they'll say, oh no, I do all that myself. Well, you're going to get yourself denied if you are not admitting that you need assistance with the ADLs that are activating your claim. So the ADLs initiate the claim. And then the keys to reimbursement, the elimination period must be documented and met. Invoices and care notes must be submitted at the same time for time periods that match. And then care notes must document that the required ADLs are provided on each day of service. So if you are only qualified, let's say your policy requires you to be dependent on 2 or more ADLs, but on any given service day, one of those ADLs was not completed, well, the insurance company will not pay for that one day of care. They will deny the claim for that day and you'll be responsible out of pocket. So if you're qualified for bathing and dressing, you need to make sure that you are bathed and dressed by your caregiver on every shift that they come out and perform. A couple of keys that I want to mention that weren't really included in the presentation, but I think are really key before I move on to VA and attendance, is there are also policies out there that are, most policies are reimbursement policies, meaning that whatever you spend with your caregiver agency, that is the amount that you get reimbursed by the policy. They also have indemnity policies, meaning that if you qualify for your policy, then you get your maximum monthly or daily benefit on any day or month in which you receive services based on the minimum of the policy. So quick anecdote, I recently met a couple, husband and wife. They have indemnity policies, $9,000 a month each, and they didn't think they were going to qualify for their policies. They're lifetime unlimited. They're paying their premiums every month. They've been paying them for 20 years. And so at their daughter's insistence, we went out and we did 2 nursing assessments on them. And they came back as dependent on 4 and 5 ADLs, which to you and me and the daughter is great news that we can get these policies turned on. They rely on each other, so they were only going to need minimum service. So at the end of the day, they were probably going to be pocketing, $15,000 to $16,000 every single month and not paying their claims anymore. Well, they were offended that our nurse thought they qualified for their policy, so they chose not to go on service. So when we go back to people denying that they need help, they're not independent, they're relying on each other. And so that's the other thing to realize about these policies, that they're designed to be independent, not that, if you have a spouse, that the spouse helps you, and they're basically helping each other. Last point I want to make is that the assist with functional incapacity, we have to dive into the definitions section and determine what qualifies as an assist with each specific ADL, because a lot of these policies will be written that the client can receive either hands-on or standby assistance. And so if somebody qualifies for standby assistance, that opens up so many more people to qualification than understand that they can qualify for the benefits in their policy. And these policies are written, we're going by the letter of the law, we're doing the nursing assessment, and you guys are seeing them as the case manager, and when somebody needs that standby assist on transferring or ambulation because they've had 6 falls in the past 6 months. So that's the idea, is to have us in there to prevent those falls in the future. I'm going to take a quick look at the chat to see if there are any questions on long-term care insurance that I need to address before we move on. Okay. Nope. We will have time at the end for questions, I understand. So I'm going to try and keep it moving, and we're going to talk VA. So veterans aid and attendance, helping veterans claim what is rightfully theirs. Again, we are speaking directly about the VA aid and attendance benefit today. There is another benefit through the community care division and the VA healthcare called the homemaker benefit, the HHA benefit, or the respite benefit. And I will touch on that because there are some key differences. So I'm going to kind of compare and contrast as we go, because I've got some questions on it. But this is specifically the CEU is about the VA aid and attendance benefit. So this will also be called the pension, but the aid and attendance is for applicants who need financial help for in-home care or to pay for an assisted living or a nursing home. It is a non-service connected disability benefit, meaning the disability does not have to be a result of service. It could be a disability from any reason. Who qualifies? This is specifically for our wartime era veterans. So the veteran had to serve at least 90 days active duty and at least 1 day during a period of war. So these are the dates in which they have to show that they had 1 date of service and 90 days active overall during any of these windows. Most of them, you did not have to be deployed in country. You could serve domestically. The one exception is the Vietnam era. There are 2 different windows. There is a window that you had to serve in country in Vietnam. And then there's another window where you could have served either in Vietnam or domestically. Who qualifies? So these are going to sound very similar. This is why we started with the long-term care insurance. So they need to require the assistance of another person to accomplish at least 2 ADLs. Sounds just like long-term care insurance. They have to offer adequate medical evidence verified by a doctor that they're unable to function alone, just like long-term care insurance. They have to meet financial qualifications that are based on income and assets, excluding their car and primary residence and their care costs. We're going to go through a calculation a little later that shows you exactly how people qualify financially for the aid and attendance benefits. Then they had to receive an honorable discharge or general under honorable discharge. That'll be indicated on their DD 214. Or they could have been a surviving spouse who was married to the veteran at the time of his or her passing and have not remarried. One of the questions that came through ahead of time was about the veteran needing to be married during the time of service, and that is not the case. They just needed to be married to the veteran at the time of the veteran's passing, and then they cannot remarry after the veteran passed away. Those are the qualifications on the surviving spouse. Then additionally, they need to be 65 years old. So if you have a younger veteran from one of our more recent wars, they're not going to qualify on aid and attendance unless they're 65 until they change those laws. How much can they expect? This is it's a little different. It's not quite an indemnity plan. It's not quite a reimbursement plan. They will qualify you 1 year at a time based on your anticipated care costs. And it's supposed to be essentially a reimbursement plan, but you're not submitting invoices and care notes to the VA every month. You're getting qualified up front, and then you're getting a check or a direct deposit of the amount that you qualify for every month. The amounts listed here, these are the max amounts. Their approval can be less based on how much care they need, what those care costs are going to look like, and if they have any percentage of disability. So if they're 100% disabled, they're not going to qualify for aid and attendance. It basically comes out of the same bucket of money at the VA. So this, their qualification is going to be based on their income, assets, and care costs. And I don't like the way they wrote this math program. I'll have to get them to look at this and review for me. But the income, we're going to do the calculator a little later to show you exactly how it works. So how do they get the benefit? These are the forms. So they can go right to va.gov and they can download all of these forms. They can fill them out themselves. Their family can fill them out. You can refer them to a specialist if you need specialists that do this. I work with great people. I don't personally fill the papers out for folks, but I do have really good elder law attorneys and specialists, VA advocates that do this paperwork for folks. Additionally, one of the best resources that I use is a website. That website is simply called aidandattendance.com, and they have a very quick 5-minute online online eligibility calculator, where basically you go to that website, there's a green button that says, do I qualify? You click on the green button, it walks the family through all the questions. So you as the case manager, if you refer them to that website, full disclosure, I have nothing to do with that website. I have no financial interest in that website. I get nothing from them. They just do a good job. They can figure out their own eligibility by inputting all of their information, and you don't have to be the one asking them about their financial situation if you're not comfortable. So these are the forms that they can get off the website if they want to do it themselves. If they don't have their DD-214, they will have to request a new copy before applying for aid and attendance. Some additional documents that may be necessary, especially for surviving spouses. You're going to need a death certificate and a marriage certificate. And you are going to need bank statements to verify income and assets. Next section is about IADLs. So the VA in 2018, they updated their processes to include the cost of IADLs. And so this is when we talk about the care costs, when we get to the example scenario in a couple of slides. This helps to increase the total amount of care cost that can be considered to help get a veteran qualified and to potentially increase their approval amount. So the IADLs will be things like shopping, food prep, housekeeping, medication handling, transportation, etc. And they previously would not be considered under the qualification for aid and attendance. Also in 2018, the VA did away with their chart of based on age, and it was basically based on age how much you could have, and they went to a straight bright line asset limit. So that asset limit for 2023 is $150,538 for all applicants. Income has to be included as a part of the assets, and if you have more than that, then it could create a delay or most likely a denial in aid and attendance. Also, we do not count the primary residence as long as the lot size is under 2 acres. You also don't count the car. So the assets are going to be more along the lines of financial assets in checking, savings, brokerage, etc. Okay. Oh, also about the house, if they move into assisted living, they don't necessarily have to sell the house to stay under the Brightline asset limit. Here's the example scenario. So a 90-year-old veteran, they must have less than 150, 538 to qualify. They have 110,000 in assets. They have 60,000 in income coming in. So you add those two numbers together and they're over. They have 170,000 in total assets and annual income. Well, when they look at it, their annual care costs are estimated to be $30,000. So you can subtract that 30,000 out of their total assets. And now we have adjusted total assets of 140,000. So the veteran qualifies for aid and attendance. This is this scenario right here. I'm just pausing on because I know this could be confusing, but it's essentially all assets in the bank plus your annual income minus the cost of care. And remember, that cost of care could be ADLs as well as IADLs. Apologize, getting tongue-tied there.
Eric, since you're pausing on that one for a second, I do have a question. If you'd just clarify,
Yeah.
and you have already said it, but I didn't hear it if you did. So assuming that the veteran is currently married, but the veteran is receiving the benefit, do the assets apply to the spouse as well, the asset limitation? Or is it only to the person who's actually the patient? Or is it combined assets?
That's a great question. It's combined assets. It's a great question. Options for submitting an application. Better, they can apply on their own with those forms we put up on the screen. If you want just the form names, I'm happy to email them out later. Or you can. I know this presentation will be available, and you can fast forward and pause on that section if you want all the form names to specifically download off of va.gov. Process can take 6 to 9 months. It is the VA, so it does take time. You can refer them to a resource to help them submit their application. I have some great resources if you need resources, or you can call us and we can help you find the best resource available. And then that's it. We did pretty well. So while we've got a quick moment, because I did get a bunch of questions on the community care benefit. The biggest differences between, let me go back and find a good slide. So on the qualifications for the homemaker benefit, there are a couple of different things to understand. Number one, the aid and attendance benefit is for our wartime era veterans only, but it also includes their surviving spouses. In contrast, the community care homemaker benefit is for all veterans, regardless of wartime era service. However, it is not available for surviving spouses. So it's veteran only, but it is not connected to wartime era service. That's number one. Number two, the financial qualifications on aid and attendance are very strict and very low. While the application for the homemaker benefit will ask about income information, it is not automatically a disqualifier. There are about 20 boxes in the section of the 1010 form that you've got to use to apply, that if you check any one of those boxes, it's a basically guaranteed approval. So there are any number of reasons that a veteran who has tons of money would still qualify for the VA homemaker benefit. So that's number two. That's the second biggest difference. The third biggest difference is that the homemaker benefit is not a reimbursement or indemnity. This is a benefit that is paid out directly to the agency that provides the care. So that veteran never has to come out of pocket. The veterans here that are getting these amounts, the $2,229 or $2,643, if you're getting that amount, that is coming to you after you're approved. So if it takes 6 to 9 months and you need care during those 6 to 9 months, you have to front the cost out of pocket. Now, I've got resources for people that can't do that if they need somebody to basically bridge and they only qualify for the aid and attendance. But there are bridge resources out there, but that's not there. They do have a cost to them. So you don't get the full amount of your aid and attendance benefit, but somebody else is covering that bridge while they wait to get paid. The other thing about the homemaker benefit is that you can be approved for anywhere. They approve you for a number of hours per week, as opposed to a dollar amount per month. So the range for the homemaker benefit is between 6 hours per week and essentially 24/7. I don't see many 24/7 approvals. Most of the approvals we see come through are between 20 to 30 hours a week. But there's additionally, veterans can be approved for the homemaker benefit and the respite care benefit. Now, respite care in the world of a long-term care insurance policy is usually for a finite number of days per year. So 14 days per calendar year, 30 days per calendar year, et cetera. In the world of the VA, that's good for a full 365 days. So, and we're going to be working on a new CEU. And once this new CEU is approved for just VA, I'll reinvite everybody to a VA only, because based on these questions, we really need a VA only CEU. So this is just kind of bonus material. We already finished the CEU portion, and I'll let you ask all the questions that you want on the actual CEU coverage. I just wanted to cover these because I got them as questions ahead of time. Most of the approvals we're seeing come through are for between 20 and 30 hours a week for homemaker, but they're also getting 20 to 30 hours a week for respite. So at the end of the day, the agency can provide 40 to 60 hours of care at no cost to the veteran and bill the VA directly. So we definitely want to make sure that we're talking about that benefit, because it's an incredibly valuable benefit to our veterans. All right. For the homemaker benefit, does the veteran still have to have an honorable discharge? Yes, you cannot have a dishonorable discharge. It has to be honorable or general under honorable. Does the asset limit apply to the vet? Okay, I got that one, Kathleen. We hit that one. Are there options for those who have served in some of our most recent wars? Yes, if we go back to, I'll pull up the slide. So these are the current, as of 2023, these are the current dates of service. So they do not have service dates specific to Afghanistan and Iraq. Most of those veterans, not all, but most of those veterans are limited by the 65-year-old age requirement. So I do expect the VA to come out with additional aid and attendance dates. The most recent war that they currently have dates on is the Persian Gulf War, and those are 1990 and to be determined. And those qualifications are getting a little different. It's no longer the 90 days active duty. They had to have 2 years active duty when we get into that war. So how do they get the homemaker benefit and respite benefits? Are there forms for that? Awesome question. So yes, the form, and if you're, I'll get all these questions hopefully from Kathleen, and if you're open to me sending you information, I will email it to you afterwards. But it's the Easy Form 1010, and essentially what they're doing is they have to apply for VA healthcare, and then I've got a really easy one-page sheet that you can give to any patient that tells them this is how you get this benefit. And they're going to have to fill out the form. They're going to have to get approved. They are going to need to see a VA physician. So they can go to the VA in South Dallas. They can go to the clinic in Plano. They can go to the hospital in Garland. They have to see a VA physician to get approved. And then they also get to choose who their provider is. I can also send you all the VA on the VA website. You guys can look up, it's public information, who is an approved VA provider. Amada Senior Care, we are approved with the VA. I'm not saying you have to refer everybody to us, But we gladly serve our veterans. We are approved on the aid and attendance as well as on the homemaker benefit, so we can accept those patients. But I will send out the website, and then you can see every agency in your area. Actually, every agency in the country is listed on there. It's all public information. But if the veteran goes with the name of an agency to their doctor, they can choose their own provider. They don't have to let the VA assign them at will. So if they come to you and they're already with a provider that they like, you can look up on the VA website, see if that provider is approved through the VA, and then your veteran can go back to their doctor and say, hey, I'm already paying out of pocket for this. I just want to start, billing it to the VA. And they should be able to do it. Sorry, going through the questions. Can these benefits be provided by two different agencies? Typically, okay, so I'm going to read this a couple of different ways. So these benefits, there are a couple of different benefits. If you want to clarify your question, you can drop it in there. But
Yes.
If you're talking about the respite care and the homemaker benefit, both under the community care benefit, those are going to need to be provided by the same agency. If you're talking about using aid and attendance to cover cover certain hours, and then the homemaker benefit to cover other hours, yes, they can do that, because at the end of the day, aid and attendance is a reimbursement, so you're technically still a private pay client of whatever agency that you have. I hope that clarifies. Does the VA deny them if they have personal insurance? No, but I love this question. Thank you, Michelle. No, they do not deny them. And if they have long-term care insurance and they qualify for the homemaker benefit, then the agency can use their homemaker benefit to clear their elimination period. And then once their long-term care insurance is turned on, they can get hours through the VA, and they can get hours through their long-term care insurance, and they can get aid and attendance on top of that. So no, they are not denied for personal insurance. I want to touch on insurance because I'm going to start looking through these questions to make sure I hit the high points. And I know we're coming up on, we still got a little time till 1, but I'll stick around as long as people are asking questions. So I have nothing going on this afternoon.
There's another question that I think you missed from Cheryl
Okay.
Akers. What are the criteria for the homemaker and respite benefits?
Right. I did miss that. Okay, so the criteria for the homemaker and respite benefits are going to be medically required. So the aid and attendance is more of a financial consideration, because if we go back to, sorry, I know I'm jumping all around. So if you look at the second bullet point on this slide, aid and attendance is for applicants who need financial help for in-home care or to pay for assisted living. So this is designed to be more of a financial assistance for our veterans. The homemaker benefit is designed to be a healthcare benefit for our veterans. And so it is going to be far more medically qualified than financially qualified. So if they need assistance with 2 or more activities of daily living, they need to fill out that Form 1010, and they need to get approved for VA healthcare. Once they're approved for VA healthcare, their physician can approve them for a certain number for whatever number of hours per week that their physician deems appropriate to assist with those ADLs. And then that goes to their case management department, which refers it out to a provider. They go on a rotating basis based on all of the approved providers in the area, unless the veteran comes with an agency and says, I want to use, XYZ caregivers, or I want to use Amada Senior Care. And then they will send that referral straight to us through their online HSRM, their online resource portal. Online referral portal. Is the homemaker and respite benefit only for the veteran, or can the spouse qualify? Great question. Yes, the homemaker and respite benefit is only for the veteran. There is no surviving spouse coverage under the homemaker benefit. So if we're working with a surviving spouse, or it doesn't even, It can just be a spouse. It doesn't have to be, the veteran can still be alive, and the VA aid and attendance can still kick in for a spouse that needs help. So no, that's one of the big differences. Aid and attendance is for both veterans and spouses. Homemaker is only veterans. Just clarifying, so the homemaker and respite benefits need to be given by the provider / agency. So by the same agency. Yes, ma'am. Yes, ma'am. But if they qualify for both aid and attendance and homemaker, then they could pick 2 different agencies. But I haven't seen the VA split a referral and say 20 hours of respite is going to a caregiving company and 20 hours of homemaker is going to B caregiving company. They go to the same. Let's see, what else do we have on here? Most of these I hope we covered. I like that. Somebody asked if a landlord can charge for electricity when AC was not working for 2 weeks. This is not part of our CEU, but I actually own an Airbnb, and I still don't know the answer to this question. I just thought it was interesting. That is, it's not part of the CEU, and I don't have a good answer for you. There are a couple of other questions on here that I would want to refer to an elder law attorney. Specifically, the question, how can seniors protect their assets if they access long-term care using Medicaid? That is 100% an elder law attorney question, which I am not. If you need an elder law attorney referral, I have great ones. Phenomenal people that I know through my Rotary Club and have known for years and years. So this one got cut off, but it said, please explain how they would get the death benefit showed on the DD 214 if it shows 10,000 something. So I'm not sure what that full question was. I also am not, the death benefit is not part of aid and attendance or the homemaker benefit. So I do not know enough on that topic at this time. My VA resource, his name is Derek Jameson. Again, I can send out any info. He would know the answer to that question. Best resource for young adults. That was a tough question for me. So most of what we do is going to be in the senior realm. I can tell you that most agencies have an adult. Thank you for the comments, guys, that are coming through on great info and presentation. Make me blush. I can say that most PAS or personal assistance services agencies do have adult licenses. So there are very few pediatric home care agencies. There are a few of them. If you need those, I can point you in the right direction. That would not be our agency. We have an adult only. But we can, if you have a 19-year-old that needs caregiver services, we can help that person. Financially, there's not much there. Most of these benefits, I mean, theoretically, they could have purchased long-term care insurance, but they probably didn't get approved. What are some resources you can offer to caregivers? I love this question. So the family caregivers are really, so the things that we're offering as a home care provider are the respite to them so that they can go back to being their family role and not just be the caregiver for their loved one. If they need to be financially, they don't qualify for any of these long-term care insurance, aid and attendance. They don't have, real estate equity that they can access or any of these other ways that you can look to afford caregiver services. We actually, we're here at Amato, we are offering through the CNA school that we're opening, we're offering family caregiver training. So that's something that should be coming hopefully by the first of the year, where people could actually come in, they can learn how to use a Hoyer lift. Y'all can do it at the hospital, but I know y'all are busy. So we're going to be offering, opportunities for people to purchase a class and come in and spend some time in our CNA school, use our equipment and have some training by our staff. I need to stop sharing my screen so that we can share a link.
Perfect.
And then, thanks, Kathleen.
Eric, I'm going to have you finish more questions at the very, very end so that
yes, ma'am.
Have to get back to work who came and joined us on their lunch break have an opportunity to head out if needed. But Eric, I'll have you just, so our program is officially over. I'm going to put the link up for everyone to do their evaluation. And while you're doing your evaluation, I'd like Eric to just share a little bit about Amada Senior Care, what they do, how they can help you as you're planning your patient care and discharges. Eric, if you want to just go ahead and tell them a little bit about that while I am working on the links.
Absolutely. So Amada Senior Care, we're a nationwide caregiving company. My wife and I have owned our office here since 2018. I wrote the little bio intro that Kathleen gave us when I was applying with the ACMA to be a presenter. We just did the ACMA. I'm not sure if any of y'all joined from the ACMA chapter meeting last Friday, but I met with a couple of folks on the local chapter board. So we're going to be working on presenting this or one of our other CEUs. We have about a dozen CCM certified CEUs, but we really focus on helping to reduce the readmissions to hospitals. So many times the difference between readmitting or not is just having that compliance with your medications, compliance with your PT. And it's about having, a caregiver in the home that understands that if you comply with your discharge orders, you're far less likely to readmit. And as we move further and further into the value-based care in the ACO world, this is just going to become more and more important. So we're really focused on that. We've built our brand off of long-term care insurance claims. And the next iteration of our brand building is discharge admission reduction. So you're going to be, hopefully you're learning more and more about us. It's nice to see some folks that I know in the list here, a lot of names that I don't know. I personally, my wife and I, we are the owners here in Dallas. I would love to meet any of you that think you can use our resources. We have, like I said, about a dozen CCM certified CEUs. If your hospital or your skilled nursing facility, if they allow us to do in-person CEUs, we can take the commercial part off and just do the CEU portion. If you have Kathleen's discharge planner, we are on the inside front cover. All of our contact information is there, specifically about long-term care insurance. Hopefully we've demonstrated our knowledge of long-term care insurance claims, but it's the kind of thing where, like I mentioned, about 20% of Texans have a long-term care insurance policy. So if you go pick one of the 1,000 caregiver agencies in the DFW market, they'll have about 20% of their clients will have long-term care insurance, between 20 and 30%. Ours is a little different. We have over 70% of our clients have long-term care insurance because we focus on it. And because we're good at it. So you can check out our Google reviews, and our clients have said some very, very nice things about our long-term care insurance expertise. But at the end of the day, I'm hopeful that if you find a client or a patient that needs caregiver services and they have a long-term care insurance policy, that you'll think to give us a call.
Awesome. Thank you so much, Eric. So appreciate you being here and providing that wonderful presentation. Anyone who needs copies of Seniors Blue Book or our discharge planner for your patients, please reach out to me. I did leave my email in the chat. And when I send your CE certificates, I will also include Eric's email and contact information for you all. And Eric, if you want to put it in the chat today, please go right ahead and do so as well, so that people can reach out to you. And I know that one or two people have put in the chat that they would like Eric to reach out to them in Dallas. And so if you also are one of those people, if you would also put that in the chat so I can make sure that he gets your email contact information so that he can reach out to you, that would be so appreciated. And we will be having additional programs, so you can watch for those. On your CE evaluation, there is a spot for some of the programs that Eric does. I did include a question that asks if you would like to have one of those programs via Zoom or in person where you work. If you are putting on there that you'd like it in person where you work, if you'd please put the email address of the contact so that we can reach out to that person to make sure that we can get that scheduled. So that's everything for today. So we thank you all for coming, and Eric is going to stay on for a few more minutes. So anyone who would like to maybe have, ask some additional questions and do so, not necessarily in the chat, but just have a conversation, you are welcome to stay on the call and unmute and have a conversation with Eric as well. And I'm also available for anyone who needs to chat. I think that you all know how to reach me though. So thank you all for coming, and I look forward to the next program. Thank you, Eric.
Thank you so much, Kathleen.
Thanks. This was great. I did hundreds of insurance evaluations for benefit determinations in long-term care when I was starting my individual practice. I'm a certified case manager, geriatric care manager, and people all the time, oh no, I can do that. No, I want you to tell me on your bad days, what are you able to do?
Well,
What's
the
your
other
good days?
reason, the other reason